Most companies lose money on invoices without ever realizing it, and it usually starts with one small step in their invoice process. Invoice processing looks simple until you see how many different places money can leak out because your invoice processes aren't airtight. Today, we're going to take a deep dive into invoice processing so that doesn't happen in your organization. And that, by the way, includes the proverbial three-way match. Not only are we going to discuss the best practices you need to use, we're going to also address the necessary controls and best practices. And we're going to address that newest problem holding virtually every organization hostage. And it's costing them millions of dollars each year. Let's start by taking a look at the different parts of the invoice. I think you're going to be surprised at just how complicated this seemingly simple document can be. We're going to go through the 14 parts of an invoice and not only explain what they are, but how each piece is used. The first part, you should have the word invoice across the top of the document in large letters. Now, you might be looking like, what in God's name would they be using that for? But this is what it's used for. When the invoice ends up in the wrong place, the person who's looking at it might not recognize what an invoice looks like. So with the word invoice on top of it, they'll know it's an invoice and it should go to accounts payable for processing. So that's kind of a no-brainer. The second piece, the name and address of the company. This is the address where the invoice is being mailed if you're still mailing it by paper, or it could be the email address where you're sending it if you're sending it in that way. It should not be the general address of the company, because think about it, when the mail arrives at the company, the person who's sorting the mail has to know where to send this particular piece of mail. So you want to tell them exactly where it should go so you can get paid on time and paid quickly. Conversely, if you're receiving invoices that do not have the correct exact address on it, you might want to inform the supplier that, hey, you should change our address. Okay. Next, it should have the name and address of the supplier on it, which, by the way, may not be where you're sending the payment. And this is simply so the person who's processing the invoice can know who it's from, and also they can make sure supplier that they're doing business with, and then it will get their processing started correctly. An invoice number, and maybe I should say a unique invoice number. This is used by the customer to weed out duplicate invoices, just for starters. So you want to have that invoice number right on the document. And you'd be surprised how many invoices come in without an invoice number. It's just going to delay your processing. Invoice date. This is used to calculate when the payment is due. Now, many accounts payable departments will start the clock ticking, if you will, for when they're going to make the payment based on when the invoice is received. But as more and more invoices are being received electronically, that should match the invoice date on the document. It will also give the people who are processing the invoice an idea of when you expect payment, and in a few cases you'll get lucky and they'll use that to start the clock. But most of them are going to put their own date down, so don't play games with that. Next we have what I call anyway, and a lot of other people do, most other people, line item details. And this is the items that are being billed and all the details. So you might have 14 green widgets at $1.14 each for a total of whatever that works out to be, line by line. This is really important because if it's going to be verified, and when the person is checking the invoice and there's a mistake or there's a discrepancy, they can circle it or make note of it, and then when they contact the supplier because there's a discrepancy on the invoice, they can tell them exactly where it is, and it will lead to getting the discrepancy resolved quicker and getting the supplier paid in a more timely manner. So it's in everybody's best interest to have that. The next item, and this gets left off more often than it should, is if there's a purchase order, the purchase order number should be reflected on the invoice. This allows the invoice processor, when they get it, it to know exactly who to go to make sure that the invoice should be paid. It's not used for accuracy. They'll just, well, it is, but I'll get to that. But this will tell them who to send it to. And in fact, many companies today, many best practice companies today, if they receive an invoice that does not have a purchase order number on it, or the name of the person who placed the order, they will send it back to the supplier saying you've got to supply this information. Okay, purchase order number, very important. And the customers also use that when they're verifying the invoice, and also to make sure that they haven't paid twice. Okay, I've already alluded to the next piece of information, the name of the person who placed the order. This is important again, so it helps the processor know who to send the item to for approval to pay, and most importantly, if there is any questions about it, they know who to go to. So just it makes the processing of the invoice a little smoother, which helps the supplier, and that then they'll get paid fast, hopefully. Okay, next item, sales tax if applicable. It's really important that this be shown on the invoice so that the customer, if they're audited for sales tax, if they are subject to a sales tax audit, they can prove that they paid the appropriate sales tax that was due. It's important that it be broken out and shown on the invoice. Putting sales tax included is really not sufficient. Next item, other charges, if there are any, like freight, customization, etc. So again, when they're verifying the invoice and the accuracy of the invoice, they can go down and they can identify each piece. So then, for example, if you included insurance and they weren't supposed to pay the insurance you were, they can come back and they can pinpoint exactly where the issue is, and that way you can resolve the discrepancy faster, one way or the other, however it's going to work out. Next item, the total amount due, and if it's an international transaction, the currency. And so this can be important. It's especially important. We run into trouble, U.S. companies with Canada, if you don't specify U.S. dollars, Canadian dollars. But whatever it is, you want to put the total amount that you're expecting and the currency, like I say, if currency is important or likely to be an issue. Next item, you want to include the address where the payment should be sent if the payment is being made by check. Now, hopefully, you provided this information ahead of time, and the customer is going to look up in their master vendor file and get it there. But just in case they can't find it, you want to include it there. And remember, that address where you want the payment sent, it might not be the same as the address at the top with your name, because you might have your headquarters address there, but you might want the money to go to a bank lockbox. This, of course, assumes that you're paying with a paper check. Of course, as more and more companies now move to electronic payments, this piece of information on the invoice is less important. And so then you might include something like, please make payment to bank account information previously shared with the customer. I know in other countries, many times they put the bank account information on the invoice itself, but in the United States, that is not a common practice, or at least it's not a common practice yet. And just as an aside, if you're processing invoices in the United States and there is a bank account listed and it's changed, don't necessarily accept it right off there. You need to call up and verify, just like you would call up and verify any other change of payment activity. There's been some fraud in this area. Okay, we talked about including the address if the payment is being made by check. You might also want to include payment terms on here. So the invoice date is October 1st. Payment terms are net 30, and then this way they can easily calculate that the payment is due on October 31st. If you're processing the invoice, don't necessarily take those payment terms as gospel, because they may not be right. They may not be what was agreed to. So you're going to want to verify that before, with your own records, before you go ahead and pay according to that. Now, the next item is is rarely listed, and I know people don't list it because they don't want a lot of calls and complaints, but it's really not a good idea. And this is what you want to include is contact information on the invoice, a name, an email address, a phone number, etc., where they can call if there is a question. Now that you understand the essential parts of an invoice, let's take an in-depth look at how invoices are handled once they arrive in your organization. We'll go through the steps and the best practices you should use every step of the way to make sure that this doesn't happen to you. Well, we said that it doesn't matter how the invoices arrive. You can do a lot to ensure that this step goes smoothly. Let's take a look at some best practices you can use in that regard.
And let's start off with what address you use. What address are you going to give your vendors to send your invoices to? Well, in today's world, you want to have 3 addresses. You want to have a postal address that is very precise. You don't want the vendors sending their invoices to your headquarters address, for example. So your address for where they send the invoices to should be something like ABC Company, 124 Main Street, second floor, or attention accounts payable, or maybe even it would be a post office box. Maybe you're going to receive the invoices there. You should also have an email address where your vendors can send their invoices, and that should also be very specific. It should not be an individual's email account. So it should be invoices at ABC Company, accounts payable at ABC Company, whatever works for you. You also might want to have a fax, although a fax number, although faxes are on the decline, if you will, as far as being a business tool, but you might want to have a specific fax number that your vendors can use if they want to fax it to you.
Now, this may sound easy. You send it out for approval and then move right on. But sadly, like most other tasks in accounts payable, it doesn't always work the way you'd like. Sometimes approvers are busy. Work with me, please. I'm trying to be nice here. And they don't approve invoices in a timely manner, or they don't get to the approvals. What can you do about it? Glad you asked. We've got some tips that will help. Let's take a quick look at the 3-way match.
What is the 3-way match? This is the process every accounts payable department should use to ensure that invoices that they are paying are accurate, legitimate, and have not been already paid. As you know, duplicate payment of invoices can be a problem, and it's an even bigger problem now because we have so many suppliers who are sending duplicate copies of invoices. But I digress. Back to the 3-way match. Okay, the 3-way match involves 3 documents: the purchase order, the receiving document, and the invoice. Let's discuss each of them in a little bit of detail so you can understand what they are and what their role is in this much vaunted, much talked about 3-way match. Okay, so the 3 documents. The first document that starts the whole transaction, if you will, is the purchase order. You'll sometimes see it abbreviated as PO, or PO number, because they all have numbers. And basically, this is the document that your purchasing department will prepare and send over to the supplier placing the order, okay, the purchase order, okay? And it will delineate, what they want to order, should have price on it. Many times they'll have terms and conditions, and it sets forth, if you will, the terms for the transaction, or at least the terms for the transaction as far as your organization is concerned. If the supplier doesn't agree with anything on it, like let's say the price, they should go back and forth with the purchasing department, and the purchase order should be changed to reflect it. So if your guy says the price is $1 and the vendor says no, the price is $2, the price on the purchase order should be changed to whatever they agree the price is. Okay, that's purchase order. Receiving document, sometimes also called packing slip. You've all seen them when you've ordered things online and the stuff comes and there's a little piece of paper in the inside telling you what's in the box that you ordered. I'm sure you've all noticed, well, like if you've ordered from Amazon, that little tiny piece of paper. Well, in the business world, it should be a bigger piece of paper. When the goods come in, what the folks on your receiving dock should do, I'm not saying they necessarily do it, but they should make sure that what is on the packing slip or the receiving document is what they receive. So if it says 15 widgets, there should be 15 widgets in there. If they are broken or there's any other problem with it, it should be noted. And of course, then there's the good old invoice. The invoice is basically the bill that the vendor sends asking for payment, and it should match what was on the purchase order and match what was on the receiving document. So simple example, if there were 100 widgets ordered and supplier only had 75, the receiving document should show 75. But let's just assume for our first example that everything matches. So when the invoice shows up in accounts payable, the accounts payable department then looks in the system for the purchasing order that goes along with it, and hopefully the invoice had the purchase order number on it, so that will make that a little bit easier, and the receiving document. They should match all three of them, and when they all three match, they set it up for payment. Now, in most organizations, before the three-way match is done, that invoice is sent to purchasing for approval, or to whoever who placed the order for approval. You would think that that person would do the checking and make sure that it matched what was on the purchase order, but that rarely happens, or it doesn't happen that often, and that's why the accounts payable department does the three-way match. Okay, so you've got your three documents, you've got your approval, and hopefully if everything matches, you can then set it up for payment and the vendor can be paid and everybody will be happy.
Let's look at some of the best practices surrounding the three-way match.
Best practice number one. And I realize that if you're in accounting or accounts payable, this might fall outside your purview, but it's something to really keep in mind. You want to make sure right off the bat, from the beginning, that you get off on the right foot. This means that the purchase orders must be accurate every single time. An accurate purchase order means one that's filled out completely, and also one that the purchaser did not mindlessly check off standard terms and conditions before sending it. If the purchaser has made some special arrangement, if it's for something as simple as extended payment terms, that needs to be reflected on the purchase order. For if it's not, and if the vendor forgets about it and doesn't include it on the invoice, there's no way the accounts payable team is going to know it when they pay the invoice, and that wonderful negotiation that your purchasing department did is going to go up in smoke, because the purchase order is going to match the invoice and they're going to go ahead and pay. So that's best practice number one. Best practice number two, and again, this might be outside the purview of accounting or accounts payable, but you want to make sure the receiving practice, the receiving doc, does what they're supposed to do. This means not just marking off goods in when they're delivered and marking them received, but actually verifying what's in, and more importantly, what's not in the shipment. This may involve checking the quantity, the quality, etc. And any discrepancies should be noted. If you ordered 100 widgets and you only got 95, then you want to make a note that only 95 widgets were received. So when the invoice shows up for 100 widgets, your accounts payable staff can make the appropriate adjustment. Okay, best practice number three. Of course, perform the three-way match before paying every single invoice. Anytime there is a discrepancies, investigate it and resolve it before you pay the invoice. For many, okay, not necessarily everybody, but many, it is becoming a best practice to use technology to automate and streamline your accounts payable invoice processing. Or best practice number five, implement strong internal controls. Sometimes people think, oh, well, we're doing the three-way match, we don't have to worry about internal controls. That's not true. You must integrate internal controls, strong internal controls, along every aspect of your three-way match, and do it with every single time.
Before we continue, let's take a quick look at the various payment options currently being used by many U.S. organizations.
Yes. I believe many payments being made today with checks could be made with either cards or ACH. Do you agree? Is your organization trying to reduce the number of paper checks? Let us know in the comments below. Cards are the perfect payment tool to handle small dollar invoices, which may be clogging up your accounts payable. Used with the proper control, you can eliminate a large number of invoices and then have your AP team spend their valuable processing time on larger dollar invoices. There have been many new card product introductions in recent years, so you might want to take a look at them. When reviewing all the advantages of card programs, keep in mind your supplier's needs as well. While many are happy and even prefer to take cards for, let's say, a $100 transaction, you may find their joy fading quickly if you try and get them to take it for a $100,000 invoice, even with a reduced fee. ACH payments have been growing in popularity as many recognize the drawbacks of paying with a paper check. ACH payments are electronic payments, but they are not instantaneous. It is important that you realize that. They have been used successfully for years now for direct deposit of payroll and direct deposit of Social Security. In growing numbers, companies are now using them to pay their suppliers. In fact, in the US, ACH payments in the B2B world now exceed 50% of the payments made. While we celebrate crossing this threshold, the rest of the world looks at us incredulously, as most make almost 100% of their payments electronically. I've had non-US people tell me things like, I don't even know where my checkbook is. And when COVID hit, our management said, no more paper checks. ACH can be used in place of many wire transfers, as they are quite a bit less expensive, and in place of paper checks, as we've already discussed. As you may have guessed, not only has there been a lot of innovation in the payment world, there's a lot more coming in the next few months and years.
I would be remiss if at this point I did not point out the danger of making duplicate payments. Saying you never make a duplicate payment is like saying you never make a mistake. Now, you may think that this is no big deal, since surely suppliers would return the duplicate payment. Sadly, only a few do. So here are a few tips you can use to avoid that nightmare.
I want to start off by smashing that myth that vendors will return duplicate payments. Here's the secret: most of them don't. Now, a few will issue credits, and then there's issues with credits as to whether your people find them, they take them, etc. But many of them don't. They quietly put the money in their pockets and never say a word about them. And then there are a few who pulled this little nasty trick that happened at one company where I worked. The vendor got the duplicate payment and came in to see the chief operating officer. I don't remember exactly for what, but whatever. And he brought that check, that second check that we had sent, and he threw it on the officer's desk. And he said to him, glad to see you doing so well. Glad to see you can afford to pay us twice. Okay, as you can imagine, what happened after the guy left was not pretty. Everyone has three opportunities to prevent, detect, and recover duplicate payments. But you've got to take action to do these. So let's start. I call it the before, the during, and the after. That's my way of breaking these things down. So let's start off with the before. What can you do before you get that invoice and you process it? Well, it's some very simple stuff, okay? You want to incorporate best practices, make sure you have strong internal controls in your processes for handling invoices and making payments. And those processes should include strong internal controls, and not limited to, but including separation of duties. You also want to minimize or eliminate as many weak practices as you can. Let me give you an idea about some of those weak practices. Returning checks to the person who placed the order, the requisitioner, as I like to call them. Petty cash boxes. All of these are opportunities, if you will, for a duplicate payment. Let's talk about during. What can you do during the processing of an invoice to ensure that you don't pay it twice, or at least help minimize the chances of not paying it twice? So I want to share with you a little story. I was at a conference, this was a few years ago, and I was talking to a guy who was an AP director of a huge company. And the reason I make such a big deal about it was a huge company, because when you see the numbers that I'm going to talk about, you're going to say, what? That wasn't an issue for them? And he shared with me that they just had a duplicate payment audit done. And his company, the last time they'd had an audit done, which I think was 2 years prior, the audit firm found $2 million. This current audit, they found $57,000. So $2 million might not be a lot of money to a billion-dollar company. And if $2 million wasn't a lot, $57,000 was really not much. So I was all ears, if you will. And I said, oh, what did you do? And he said, oh, all that stuff you talk about. And what he meant was using things like rigid coding standards, making sure that when invoices are processed, that the standards that are used are rigid, and you've spelled it out and you've given it to your processors so they all know exactly how you want the data entered. I like to say, when it comes to data entry and accounts payable, creativity is not desired, not a desirable function, if you will. Limiting the payment types for each vendor also will help. So then you don't have to worry. You made one payment with a check, let's say, and another one with a credit card. You also don't want to allow the payment of invoices either on expense reports or through the petty cash box. Some companies will take it one step further, and when they have what they consider a large payment, and of course, what is large is going to depend upon your individual company. Obviously, a large payment at Apple is different than a large payment at the corner stationery store. So whatever is large, you want to double check those items to make sure that they've not already been paid. I also like to tell people that they should, if they've got rush checks or items that were paid off a check request form because the invoice was lost, that they might want to put them in a folder and then go back and research 2-3 weeks later, a month later, to make sure that that invoice did not show up and get paid. Also, you probably want to have some special processes and procedures in place for payments that are made through wire transfers, because that's a whole nother issue. And also, if you are having payments made outside AP, you want to have some processes in place to make sure that those folks are using the same strong practices and controls that you use in accounts payable. We see at a number of companies will have ACH payments made outside AP, maybe in Treasury, maybe elsewhere in accounting. I want to say that that happens at about 20% of the companies. And as more companies are increasing the number of ACH payments, there's also a possibility of increasing that. Now, we're going to talk about after the payment's made, because there are some things you can do that. But first, I want to say a big thank you to all our listeners who very thoughtfully give us thumbs up or likes on our recordings. And if you have any other tips on preventing duplicate payments that I haven't shared, feel free to put them in the comment field, or of course, I always like to hear from people. Okay, after the payment's made, the money's out the door, but it doesn't have to be out the door forever if you paid twice, which hopefully you didn't. But at a minimum, you want to audit your payments. When I say at a minimum, I hope everybody who's listening today is doing statement audits. And that's where you call your vendors and you ask them to send a statement showing all outstanding activity, all open activity, not just open invoices. They're happy to tell you about the open invoices, but you want to find out, are there any open credits that we don't know about? You want to get that money back, obviously. So if you haven't been doing that, that's kind of a no-brainer. And if you do find a credit on a statement that was due to a duplicate payment, you want to investigate, because you know what they say about where there's smoke, there's fire, or, and as I like to say, where there's a duplicate payment once, it might happen more than once. And so you want to investigate what happened, figure out, was there a weakness in your controls and your processes, and then fix it. Okay, you want to close that loophole, whatever it may be. Also, you want to be very careful about those vendors who change the invoice number, and many of them do. Some of them will just add like an A to the end of the invoice number for the first copy that they sent out and a B for the second copy, but others are change the invoice number completely. So you want to be very careful about those vendors, and when you figure out who they are, you want to make a special notice of them so that you can always check to make sure that you don't have them, okay? So be very careful about them. And again, when you find a duplicate, you want to analyze what was wrong, what went wrong in our system so that we made this payment. Now, some of you, hopefully not you, but a few people out there might be sitting there thinking, saying, well, we don't make duplicate payments. Our system won't allow it, or whatever reason that you have. Let me just say this. Maybe you don't make duplicate payments often, but saying you never make a duplicate payment is like saying you never make a mistake. I like to say, from my lips to God's ears, everybody does occasionally. And by the way, if it's only occasionally and your staff makes one, take it into consideration that this is something that happens everywhere. Now, if you still think, hey, she's making a big deal about nothing, let me just point out one more issue to you. A lot of times, fraud in general starts off with an honest mistake. So you pay someone twice, they realize they got that second payment, they don't return it, God forbid, and then they say, aha, maybe if we send invoices twice, they'll pay twice, and they start doing it. So an honest mistake can sometimes lead to fraud, so which is why you want to stay on top of this issue.
These discounts are really important to the organizations that are offering them, so it is critical you understand what they are and how they work.
Early payment discounts are exactly what they claim to be, a discount for paying early. Let's take a look at the nitty-gritty of how early payment discounts work. For starters, not every supplier offers them. Typically, they are negotiated during the initial stages of the business relationship. They should always be included in the terms and conditions. Some suppliers offer them as a matter of course, and others don't offer them at all. This is one of those situations of if you don't ask, you don't get. So ask. All they can say is no. For the purposes of this talk, we're going to focus on the most common discount offered. The discount does not have to be these numbers, but just I want to make the example and I want to make sure that you understand it. So it's 2, 10, net 30. It is typically written the number 2, a slash sign, the number 10, net, the number 30. This means that a full payment is due on the 30th day after the invoice date. However, if the invoice is paid within 10 days of the invoice date, the customer can take a 2% discount, hence the 2/10. So if you had an invoice of $100, the customer has a choice of either paying $100 on the 30th day or $98 if he pays it in day 1 through 10, up to the 10th day. The $98 payment is arrived at by taking 2% of 100, which is $2, and subtracting it from the total amount of $100. Any payment after the 10th day up until the 30th day should be the full $100. There are no partial discounts in the early payment discount world. You'll sometimes see the term early payment discount or early pay discount abbreviated as EPD. Now, you may be looking at this simple example and wondering, why would anybody make a big deal about this? She's talking about $2. So the answer is twofold. First of all, the smaller dollar amounts add up. And secondly, for most organizations, early payment discounts represent the best financial alternative they have. The 210 net 30 converts to a 36% rate of return. For most organizations, unless you're out there collecting money with a baseball bat, which I'm thinking you're not if you're listening to this is probably the highest rate of return your company can get with absolutely no risk. I'll skip the math for now, but perhaps we'll do another broadcast showing it. So if you're interested, let us know in the comments below. So as many companies would like to get more early payment discounts, your suppliers are not such a big fan of it, okay? So it's up to you to ferret out these opportunities. Here are 3 quick ways to do that. So number 1, pretty simple. Make sure you earn all the early payment discounts you're entitled to. This means identifying those vendors who offer early payment discounts and then fast tracking the processing for those so that you're able to get them paid within the 10th date. For many organizations, it is difficult to get an invoice processed, approved, and scheduled for payment in such a short time. But that's what you need to do. You need to also stay on top of your approvers because that's often where the holdup is, and make sure they understand that approving quickly is important in this case. Okay, that's tip number 1. Tip number 2. Many times, offering an early payment discount will be a standard within a particular industry. So if you have a vendor that is offering you an early payment discount, look at all the other vendors in the same industry that you are doing business with, and then approach them and ask them if they offer early payment discounts. Some will, some won't. Again, they don't like it, so they're not going to volunteer the information, but if you approach them, they may relent. Tip number 3. You want to train your processes to look at invoices closely. And if it's on one invoice that you get where you normally don't get it, know that this vendor is probably offering it to others. So ask. So if you're doing business with vendor, XYZ, and they don't offer you early payment discounts and you typically don't get one, and one of your processes knows that one invoice comes through and it's showing an early payment discount, this means that they might be offering it to some of their other customers. And so you want to ask, see if you can get to be one of them. Again, if you don't ask, you won't get.
Discrepancies when they're doing the three-way match. They need to be resolved and they need to be resolved quickly. Let's take a brief but deep dive into how you can do that.
What do you do with the data related to the accounts payable process three-way matches that go wrong, i.e., when you match the invoice against the purchase order and the receiving document and they don't match? There's a wealth of business intelligence in that data if you choose to collect and analyze it. And I'm sure you're going to realize that I'm going to recommend that you do that. It can and should be used to drive process improvements across your entire procure-to-pay chain, not just the accounts payable function. And let's talk about tracking discrepant invoices. You absolutely should be tracking them. You can do it in your ERP system if you have the functionality to do that, but many ERP systems don't have the functionality. And so someone, usually the accounts payable manager, does it in a separate spreadsheet. You can just do it in a simple Excel spreadsheet. And you want to do this for a number of reasons. Obviously, you want to get the invoices discrepancies resolved, but you also want to do it in a timely manner. Because if you don't do it in a timely manner and the due date passes, the vendor will send a second invoice. So you'll have one copy of the invoice, and then you'll get another copy of the invoice. And if it still is not resolved by, let's say, 60 days, if payment was due at 30 days, you'll get still another copy of the invoice. And maybe you'll get more than them. So a lot of extra work, a lot of extra invoices, and occasionally some of those invoices get paid twice, those second and third copies, and we absolutely don't want to do it. So here's how you can do it. Let's assume that the accounts payable manager, the director of accounts payable, maybe an assistant controller is going to do it. And what you're going to do is you're going to take a spreadsheet and you're going to keep track of the discrepant invoices and who's supposed to resolve them. Now, I'm not going to start ranting and raving about the fact that most of the time the responsibility for resolving discrepant invoices lies in accounts payable, when accounts payable is the group or the person who has the least amount of information, be that as it may, but it's usually in accounts payable. And you're going to create this spreadsheet and you're going to have columns across the top and you're going to try and capture every possible piece of information. So you'll have the invoice, the date that you got it, who was the purchaser, who was the supplier, who was the AP person, and any other relevant people who were associated with this. Then you're going to put common reasons why the match might fail. Let's say inaccurate invoice, pricing error. There's a million other reasons. You know what they are. And a lot of them will be peculiar to your organization. You're also going to date this. You're going to date when the invoice came in, when the problem was identified, when the emails were sent out either to purchasing or to your supplier to try and get it resolved. And you're going to keep track of this. You can use this for two reasons. Number one, for tracking purposes, to make sure that you get these discrepancies resolved in a decent amount of time quickly, so you don't get those second invoices that I talked about. And also for analytical purposes, so that you can try and use them as I'm about to describe. You're going to have a comment field also in this. And you are also going to put dates down when the problem was identified, how long it took different people to respond, and when it was resolved. Okay? And you want to make sure your invoices don't languish, and you also want to collect this data. Now, periodically, and what I mean by periodically will depend upon your organization. If you only have one or two discrepant invoices, let's say a month, well, this isn't going to work for you. But I suspect if you're like 99.75% of the people who I encounter, this is not the case. So periodically, it could be weekly, it could be monthly, it could be quarterly, depending upon what your workflow is, what other work you're doing, and the nature of your business. You're going to pull the spreadsheet out and you're going to review it and you're going to sort the data and try and identify common problems. So, for example, you might sort the data and review by reason for the discrepancy, which, by the way, you're going to enter onto the spreadsheet afterwards when the item is resolved. So a little extra work maybe in keeping the spreadsheet up. Maybe then you'll discover that one of your processes in AP has an inordinate amount of the problems. Or Perhaps you're having poor purchase orders come out of a particular unit in purchasing, whatever. You're going to review this data. So now you've identified the problem and you need to take action. Now, I would strongly suggest that you start with any problems that may be in AP, so that when people start pointing fingers and saying, well, did you look in your own house? You have some data to back it up and say, yes, we did, and we fixed our problems. So if the problem is in accounts payable, is it with one person, one group? You want to talk to that person, maybe even if it's just like one particular processor and maybe their manager, and see what's the problem. Do we need more training? Maybe that person was new and didn't get adequate training. Maybe you had an automation solution and the training that you was given was, good for 6 of the people on your staff, but this one person didn't understand something. Or maybe they're sloppy and they just need to take more care. But be very careful about assuming, that somebody is sloppy. Maybe getting 2 screens for your processes. Maybe that would help. I was on a call this morning where I heard people are talking about getting 3 screens and a few people even getting 4 screens. So you can see where we're going with that. Okay. So that's, once you've narrowed down your AP issue. Now, let's say the problem was inaccurate purchase orders. Let's say that's what you discovered was the problem. Maybe in this case, the supplier is notifying purchasing of pricing errors, and rather than issuing a corrected purchase order, the purchasing person figures, accounts payable will catch it. Well, that's not acceptable. That creates more work for AP, and it also increases the chances that maybe something will slip through and you'll pay more than you should. So maybe there's one area in purchasing, maybe one location is making all the mistakes. And in that case, maybe there was more training that's needed. So there are many different reasons. Once you identify the reason, then you can talk very tactfully, I might add, to the group involved and try and get that fixed so that the errors related to that particular cause are, I want to say eliminated, but from my lips to God's ears. Okay. Now, if the problem is with the invoices, you need to tread very carefully because you don't want to offend the supplier, especially if it's a large supplier. And this might be something that you might have to work with purchasing and maybe approach them together. And it could be, honestly, that you'll talk to them and nothing changes. And, you can't make them do something. I mean, maybe you cannot do business with them, but I doubt that the organization is going to decide not to do business with them because accounts payable isn't happy with the invoices that they sent. Just a sad fact of life. So keep in mind that even after you talk to them, you may not be able to fix the problem. And if you can't, okay, this doesn't mean, just give up. Just make a note of who that vendor is. You won't have a lot of them. There'll only be a few that will fall into this category. And then once you know who they are, you always double and triple check their invoices. Yes, it's extra work, but you don't want to pay them twice. Clearly, that's an unacceptable outcome.
You may think that if you do everything that is explained here, all your invoices should sail through and you'd have no errors, duplicate payments, frauds, unhappy suppliers, or even unhappy management. Sadly, it's not that simple, and invoice errors still have a way of sneaking in. It's more complicated than most people realize. Now that you understand that, let's make sure you grasp all the controls that need to be around your process. Not every organization is as diligent as they should be when it comes to basic internal controls needed to protect the organization against paying twice or worse, fraudulently. Now, before you say, well, it's not the end of the world if we pay our suppliers, they'll return the excess payment. Let me assure you that is only true in a small number of cases. What's more, and I probably won't get an argument on this, criminals will never return the funds. They'll just try and get you to make the same mistake as time. So what are these basic controls? Let's dive in and take a look right now. So your first control, if you will, is revolves around separation of duties, okay? When it comes to the accounts payable space, what this means is no one person should have access to more than one leg of the entire a procure to pay chain. Now, separation of duties, sometimes called segregation of duties, kind of a basic, and it used to be just a small company issue. But you know what? Thanks to technology and innovations and us all doing a much better job, accounts payable departments are getting smaller and smaller, and so separation of duties has now become a mid-sized company issue in some cases. All right, let's move on now to our second basic control in accounts payable, the three-way match. Now, we have some other videos on the three-way match, so I'm just going to go over it briefly, and I'll link to them. You can watch them later if you want. So the three-way match involves the process that your accounts payable team should be using when they get an invoice to verify that it is accurate. The price is accurate, you got what you ordered, etc. And it involves matching the purchase order with the receiving document with the invoice. And interestingly enough, there have been a number of folks who've done surveys, and the document that has the most mistakes on it, according to anyway these folks, are the invoice. So don't just assume, oh, the invoice is accurate, I can go ahead and pay it, because if you take the approach, we get an invoice, we pay it, well, you'll be paying the wrong price, and you know they never charge you lower than you had agreed to, and you'll be paying some invoices twice, as we discussed earlier. So make sure you implement the three-way match and you stick to it. The next step that I want to talk about, the next building block, if you will, that everybody should be using is standardizations. So everybody within your organization, when they process an invoice, they do it the same way. And the benefit of this is that way, when when an invoice comes in and I process it, it goes through. And then when a copy of that invoice or a second one comes in and you process it, you'll be able to identify it very easily as a duplicate. So this means that we write out our standard processes, and then we make sure that we give it to everyone so that they can use it. This also includes, by the way, I'm not going to rant and rave about this too much, but a coding standard which tells your folks how to enter the data exactly. This is one of those places where creativity is not desired, and you want to tell people exactly what they should be doing and how they should enter the data. So simple example, when we start talking about having our suppliers, our contractors in there, or even if your employees are in the master vendor file for purposes of expense reporting, how you enter their name. Do you enter it first name, last name, or last name, first name? So do you enter Mary, Schaefer, or Schaefer, Mary? Those will show up when you're looking for duplicates as two different people. So you want to be very precise in how you set that up, and you want to make sure that your folks are all, using your precise instruction. Okay, the next thing that I want to talk about, the next building block, is your AP manual. Now, we talked about standardized instructions, and these standardized instructions should be put in your accounts payable policy and procedures manual. And that manual, by the way, should be shared with everyone. And this is the important thing, it should be updated anytime you make a little change. Too often people put a lot of work into setting up their accounts payable policy and procedures manual, and they have it perfect, and then they forget about it. And so they start to make little changes, nothing major, and they'll think, we don't have to update that, we'll do it next time. And then before you know it, 2, 3, 4 years have gone by, you've made 12 little changes, and what you're doing today in your accounts payable operation bears no resemblance whatsoever to that policy and procedures manual that you have sitting on your shelf. I like to call the policy and procedures manual your protection against the lottery. So picture this, everybody in your AP team, they chip in and they buy lottery tickets. A lot of companies, different departments will do this. Everybody chips in, and then you win $100, everybody gets $10, or maybe you get lucky and they win $5,000, and so and it brings camaraderie, it improves morale. But let's say your AP team chipped in, they bought the lottery ticket, and they won the big prize, and so everybody came in and quit because they now no longer need to work. Will you have a document that will allow somebody to go in there and get your bills paid and keep your company operating? That's your safety net, if you will, because if you don't have that manual, you are going to be in big time trouble should everybody walk out at the same time. Okay, so your standardization, it should be written down and it should be put into the policy and procedures manual so everybody knows what they're supposed to be doing. Okay, the next issue I want to talk about is approvals. You want to make sure that when you get an invoice that it goes out for approval. This will help protect against you unintentionally paying a fraudulent invoice that came in and looked legitimate. Now, you may be saying, but you told us to do the three-way match. Why do we have to do the approvals? And I'm going to tell you that basically companies do, okay? And but when your people do the three-way match, they know who your vendors are, who they ordered what from. And so if there's a criminal out there who's playing games, they should be picking it up. But the approval that they'll give you just says, like, go ahead, it's okay to pay this invoice. Most of your purchases, when they're approving that invoice, they don't check the price, they don't check the quantity, they don't even really know if some of the stuff was broken when it came in, etc. So that's why you do the three-way match. But you also need the approvals, because this is kind of another set of eyes looking at the invoice and saying, yes, these are people that we do business with. Yes, we want to go ahead and pay it. And this hopefully will help you weed out those invoices that came from crafty criminals who are trying to impersonate one of your suppliers. Now, before we get to the one that many skip to their detriment, if you're getting any value from this talk, please hit the like or the thumbs up button to let us and YouTube know that we should make more content like this for you. Alrighty, and now our next building block, if you will, and as I said, the step that many they just skip, they don't even realize, is that you periodically want to do a review, and you want to do two reviews. Number one, you want to sit down and go through the manual, and you want to make sure it reflects what you're doing now, because as I mentioned earlier, sometimes people will implement small changes that don't get reflected into the policy and procedures. When you're doing that review, you might also want to take a look to make sure that you've implemented any new best practices that have come on the horizon that you've heard about. The big one that we've had in the last few years was this phoning to verify change of bank account requests that come via email. The other thing that you want to do, and this is where the real problem comes in sometimes, is that you want to sit with each of your processes and make sure they're doing what the manual says they're supposed to be doing, what your standardized procedures are. Because occasionally what will happen is you'll have a processor who comes up with a shortcut, and the shortcut makes their job easier, and so they start doing it. Now, there are two things about that shortcut. One, sometimes it's a shortcut for them, but it creates a problem for somebody else, or it creates worse, an internal control issue, and of course then you want to put a stop to it. But number two, sometimes it is a good idea because the people closest to it have, the best ideas, if you will. And if that is the case, then you want to implement it across your whole department and have everybody use it. You might think that you're done, but there's more. Internal controls help. But without best practices, you'll still run a less than ideal operation. So let's take a look at the best practices you need to incorporate. Invoice best practice number one. Procedures for handling invoices should be standardized. Everybody should do everything exactly the same way. That way, if an invoice comes in today and I process it, and one comes in 2 weeks from now and you process it, you'll be able to identify it as a duplicate fairly easily. Invoice best practice number two. Annually, the manager should review the work of each processor to ensure compliance with those standardized instructions. Any shortcuts should be investigated. This does not have to be a big formal process. Just go, the manager or who's ever doing the review should just go and sit with the processor, tell them just keep operating the way you normally would, and then watch how they do it. Are they using the standardized procedures that you've outlined for them, or have they integrated a shortcut that they've come up with? If they've integrated a shortcut, you want to investigate. Oftentimes those shortcuts will make their job a little easier but create a problem down the road. And if that's the case, if you have a control problem, for example, or someone else isn't able to do their job because of this shortcut, then you want to cut it off, you want to stop it. But If this shortcut turns out to be actually good, then you want to use it, you want to integrate it into your processes and make sure all your processes are using it. Invoice best practice number 3. Centralize the receipt of invoices with one special email address just for invoice, a very specific snail mail address for those folks who are still mailing their invoices by paper, and a fax address just for invoices because some people are still faxing invoices. And ideally, by the way, if you do have that fax address, you want to tie that up, match it with an e-fax facility that will convert that paper faxed invoice into an electronic document that's emailed, and you can be processed from there. Which brings us to invoice best practice number 4. Push for electronic receipt of all your invoices. By electronic receipt, I mean either using your portal or your automation solution, or, and this is how most of the invoices are coming in today, invoices should be emailed. So you remember the separate address that I told you to set up. Invoice best practice number 5. When selecting an automation solution, make sure it can read PDFs that are emailed in. That way, you don't have to harass your suppliers to change their process, which you know is always a nightmare. They can just continue emailing you their invoices as they have been doing it, and then you don't have to get them to change anything, because as you know, getting a supplier to change is often not easy. Invoice best practice number 6. Ruthlessly weed out duplicate copies of invoices. Unfortunately, we're in a situation now where some suppliers have realized that email costs practically nothing, and so they'll send multiple copies of the same invoice. This creates extra work for your accounts payable staff, and if you're not really on top of it, it will also create a duplicate payment. So you want to be really ruthless about weeding out those duplicates. Invoice best practice number 7. You want to identify those suppliers who are sending duplicate copies of the invoice or triplicates or whatever, and you want to ask them to stop, but if they don't, you want to double check all their invoices. And in fact, you can even tell them, hey guys, if you don't stop sending double copies, we're going to have to put you on our special list that will where we double check, and that will probably delay your payment a day or two, and they're not going to want that. Invoice best practice number 8. You want to have a coding standard, and you want to insist that all your processes use that coding standard, even if you are automated. Why? Because even if you're automated, there's still a certain amount of manual data entry that needs to be made. There are corrections that have to be put in, and you'll still be getting some paper invoices unless you're really, really lucky. And you want your people to stick to the coding standard for the reasons that we used it in the past. It helps reduce duplicates. Invoice best practice number 9. When your processes are handling invoices, you want to use the three-way match so they can identify potential problems on the invoices. Okay, that's your best way of weeding out invoices that have inaccuracies on them. And we've got several other videos on the three-way match, and I'll put a link to them in the description in case you want to investigate that more. Invoice best practice number 10. When your processes are processing invoices, they're going to have some that have discrepancies and need to be followed. The manager should track this and follow up to make sure that these discrepancies are being resolved, because if these discrepancies are not resolved in a very timely manner, a second copy of the invoice will be sent. That's extra work for you guys, and sometimes those second copies get paid. So follow up on discrepant invoices, and if you can at all possibly do so, get them resolved before the payment date so that the payment is made on the due date, and then you don't get that second copy. Invoice best practice number 12. When discrepant invoices are resolved, and hopefully you're tracking this either in your ERP system or maybe in a spreadsheet, you want to make a note of the cause and then track this, as I said, in the spreadsheet. Periodically, then you want to go back and review it and see if you can identify root causes or root problems. Let's say you had 100 discrepant invoices and 25 of them had the same problem. Well, you want to look at that problem and say, what can we do to fix it? Oh, all these invoices were a result of POs coming out of our Duluth office. Maybe our Duluth office needs a little more training on how to put together POs, or whatever it is, okay? So you want to fix the problems that are the biggest ones and also the easiest ones. Even if you only have 2 or 3 invoices with this problem, if it's really easy to fix it, just go ahead and do it. Periodically, you want to do this analysis. This is not a one-shot deal, because even though you'll maybe do the analysis analysis, you'll get most of your problems fixed. This redoing the analysis will help you identify new problems that may have cropped up, and there's always new problems on the horizons, as well as, and this pains me to say, old ones that may have returned. Just because you think you fixed the problem once doesn't mean that 6 months or a year from now it's not going to be back, especially if you have a turnover in staff, or there's a turnover in staff at one of your suppliers, because who knows what's going on there, and of course you have no control over that. Invoice best practice number 13. Invoices with early payment discounts should be tracked, identified, and fast-tracked so that you earn as many of those early payment discounts as you possibly can. I had one accounts payable professional tell me one time, the only mortal sin in our organization is missing an early payment discount. It's the best financial return for your organization, and you want to make sure you get as many of them as you can. And for a really selfish reason, if you're losing a lot of those discounts, you can better believe somebody in finance is going to realize it and do a little analysis and point it out at a time just when you don't need them to be pointing that out. Invoice best practice number 14. Insist that your suppliers include the purchase order number on their invoices. Now, you think they would automatically do this, and many do, but there are a few who don't, and that makes it more difficult for your processes to figure out who to send the invoice to for approval, and also to do the three-way matching, and also to extinguish the right purchase order. So if they don't include it, just send it right back to them and say, we need the invoice to include the purchase order number. Yes, that will take a little bit of extra work, but doing a little bit of extra work now will save you time in the future as they submit many, many invoices you want them to have. So insist on the purchase order number. Of course, this assumes that you issued a purchase. Invoice best practice number 15. Once an invoice is processed and scheduled for payment, the related purchase order and receiving documents should be extinguished immediately. No waiting till the end of the week or the end of the month or when you have time. Immediately. That will make it less likely that if a duplicate copy of the invoice shows up, it will be paid. Before we get to the last few, if you're getting value from this talk, I'd love it if you would hit the like or the thumbs up button. It sends a message that you're getting value from this talk and I should make more like it. Invoice best practice number 16. Invoice processors should not update the master vendor file. You should have a separate person to do that, because if your processors are doing it, it is a violation of the appropriate separation of duties principle, which is the bedrock of our strong internal controls, fraud prevention, and duplicate payment protection. So your invoices should not be updating master vendor file. I know a lot of people do this. It's easy, but it's not the right way to do things. Sometimes the right way is not the easy way, as I'm sure you've noticed before. Invoice best practice number 17. Don't leave processes handling the same accounts year in and year out. You want to periodically rotate them. This is because if you leave them on the same accounts, there's a chance that they'll become friendly with the processor on the other side, with the accounts receivable person, which is great if you have a problem, but not so great if the two of them become so friendly they collude and then they defraud one or both of the organizations. So periodically rotate them. Along the same line, best invoice practice number 18, require that anyone having anything to do with your organization finances, and that includes processing invoices and the master vendor file, that they take 5 consecutive days off, during which time someone else handles their task. It's general consensus that if there is an ongoing fraud, it will be uncovered during that time period. So don't let them do the job from home. That completely negates the whole purpose of having them take the 5 consecutive days off. And invoice best practice number 19. Invoices should never, ever be paid by an individual personally and then put in for reimbursement on their expense report. For if they do that, it will be virtually impossible for you to identify a duplicate payment, because when that invoice shows up in the in the normal course of things, your processor is going to go process it, the purchase order is going to be outstanding, the receiving document is going to be there, and they're just going to go ahead and pay it. And as you know, very few vendors automatically return duplicate payments. So do not let anybody do that. And if they do it, you make a big to-do about it and basically tell them if they ever do it again, they're not going going to be reimbursed, and then immediately make sure the purchase order and the receiving document are extinguished and your accounting records are updated appropriately. With all the information you have at this point, you may think you're armed to overcome 90% of the hiccups that might occur with invoices. There are some common mistakes that happen. Let's take a look at them to make sure they don't creep into your processes.
Rookie invoice processing mistake number 1. Just paying when invoices show up without bothering to validate the information or that, for that matter, the invoice is valid. The problems caused by this mistake are several. Number 1, you definitely end up paying invoices twice if you do this, especially with about 25% of all invoices now being spent multiple times. What's more, when you do this, if your supplier realizes that your controls are not up to snuff, a few devious ones will continue to send duplicate copies, causing you to make duplicate payments on a regular basis. Not only that, you'll end up paying the wrong amount, you'll end up only paying partial invoices, and most troubling, you'll end up paying fraudulent invoices when some crook has decided to send something that was really not an invoice. So don't just pay whatever invoice shows up. You need to do some verifications. And hopefully most of you are. Rookie invoice processing mistake number 2. If an invoice shows up for an amount of money that is lower than what was on the purchase order, you go ahead and just pay the lower amount. Now you may think, oh, good, we saved a few dollars, maybe they had the price wrong, etc. But this can create numerous problems. For example, it may have only been a partial invoice, and they may have been billing you at the wrong price. Then another invoice will show up for the remainder of the invoice, and if your ERP system won't take duplicate invoices with the same number against the same purchase order number, you may not be able to process. Basically, if the invoice has a different price on it than the purchase order, that should be a sign that there is a problem and you need to investigate and figure out what it is. Rookie invoice processing mistake number 3, not asking a question when you don't understand something. Sometimes people, especially when they're new at a job and they think something's been explained to them, they don't want to look stupid. They don't want to look like they don't know what's going on. And so they have a question, they're not sure about something, and they don't ask. Big mistake. There are many problems that can be caused when you do this. Number 1, you can be duplicate paying. You can be coding wrong. There are so many different mistakes you can make that all will end up with the company paying more than once, paying the wrong supplier, paying the wrong amount, etc. So if you don't understand or you're not sure, ask. Better to ask and not make the mistake than to take a guess, make the mistake, and then when it's uncovered, not so pretty. Rookie invoice processing mistake number 4, not paying attention when entering data to all the data, not just the dollar amount and the purchase order number. Now, to be honest, if I was processing an invoice, that's what I would focus on, but there are problems caused by this mistake. For starters, if you don't enter the invoice number correctly, then when a duplicate shows up, it is apt to be processed, because invoice number is one of the primary ways companies identify potential duplicates and stop from making the duplicate payment. So pay attention to all the data, not just the dollar amount and the purchase order number. Invoice number really important. Obviously, address really important. Payee important. You don't want to pay the wrong payee. So basically, all the parts of the invoice are important. Rookie invoice processing mistake number 5. If the invoice can't be entered because the ERP says the invoice number is a duplicate, don't just add a space or a dot or a letter to force it through. Why? What's the problem with this? Well, the ERP is telling you you've already processed this invoice, so it's a duplicate. So either the invoice number was not entered correctly the first time, or this is a duplicate copy. You need to stop and do the research and make sure it is a legitimate invoice before proceeding. Don't just assume it is because it's been approved. Rookie invoice processing mistake number 6, not using the rigid coding standard provided by the company. This is actually the best way any organization can protect itself against making duplicate payments. Now, it may seem very, confining that you have to enter the data exactly as the company tells you should be entering it. but this is their best protection against duplicate payments. So what problems can be caused if you don't do this? Well, you'll make a duplicate payment. And of course, as we've already discussed, if you make a duplicate payment, sometimes the vendor realizes you don't have your act together, and maybe a few of them will try and get you to make the same mistake again. Now, sometimes folks will say to me, well, when we make a duplicate payment, won't the supplier automatically return it? And the answer to that is 99% of the time, the answer is a resounding no. Suppliers don't automatically return duplicate payments. Sometimes they give you credits, sometimes they don't. Sometimes you find out about those credits, sometimes you don't. So use the rigid coding standard, even though you may have a more creative way to enter the data. Rookie invoice processing mistake number 7, not returning invoices without the name of the purchaser or a purchase order number to the supplier so that they can give you all the information you need. Problems that this can cause include wasting a lot of valuable resources in accounts payable. Too often what we'll see is somebody going around from person to person trying to figure out, hey, who ordered this? Who should I send it to for approval? Not a good use of your time. And you know what? Your suppliers should know better, okay? This is not some esoteric requirement. This is kind of basic accounting 101. So just return the invoice with a very polite letter saying you need to have this additional information. Now, you might say, well, why don't I just, call them up? You can do that, but by returning it, you're hoping to change their behavior for the future so that you don't have to deal with this problem again. Rookie invoice processing mistake number 8, paying from a statement. Okay, so best practice for accounts payable departments, with a few minor exceptions, never pay from a statement. This can cause a lot of problems when it comes to canceling out purchase orders so that they're not used again when a second invoice shows up. So if you pay from a statement, too often what happens is an organization pays from a statement and they pay 3 or 4 or 5 or however many invoices are on that statement. And then when those individual invoices show up, they go ahead and also pay the invoices. So another duplicate payment. And I've already shared with you what happens with duplicate payments, so I won't bore you to tears and go through it anymore. Rookie invoice processing mistake number 9, not recognizing vendor credits and then paying them. So we try and encourage managers when they're training new staff to process invoices that they train their staff to recognize vendor credits, because that's actually money that is owed to the company, not money that you owe. And so when you pay a vendor credit, what you end up doing is doubling the existing liability from your supplier to you. And the problem that this causes is the company loses money. They don't get the vendor credit, and now they're out even more money. So as part of training your new invoice processes, make sure that everybody recognizes vendor credits. They know what to look for and what to do with them once they see them. Rookie invoice processing mistake number 10, printing emailed invoices, okay? This creates a lot of extra work for the accounts payable staff. You've got some efficiencies that you can gain by having invoices emailed, but then if somebody takes the time to print the invoice and then use that printed invoice to key data, they've wasted some time, and we're not even going to talk about the environmental impacts of this. So basically, it just makes your accounts payable function a little less efficient and productive than it could be. And of course, the solution for this, and hopefully everybody who's listening to this has already done this, and so you don't have to go out and do it, is your invoice processes should have 2 screens. And that way they can put the invoice copy up on one screen and they can do the data entry on the other, and there's no need whatsoever to print invoices. I know in some cases where this has become such a problem, managers have taken away the ability to print invoices from their team, but hopefully you don't get to that point. Rookie invoice processing mistake number 11, not returning invoices that don't have sales tax broken out. Now, this is not some real obvious, but sales tax, it's the responsibility of the payer, that's you, to make sure it's paid, but it's the responsibility of the seller to collect it and remit it. And so if you get an invoice that just shows, you paid $100 and is silent on the question of sales tax, then if you are subject to a sales and use tax audit, the auditor is going to say, oh, but you didn't pay sales tax on this item that you should have paid sales tax on. So Simple solution: when you get the invoice for something that you thought you should have paid sales tax on, you want to go back to the supplier and ask them to break out the sales tax so you can show them what that you've actually paid it. Rookie invoice processing mistake number 12: not doing the three-way match before scheduling an invoice for payment. The three-way match is where you compare the invoice to the purchase order and the receiving document.
Sadly, the biggest headache is also the newest headache. And thanks to technology and email, it has exploded in recent years. So let's see what can be done to eliminate the hordes of duplicate copies of invoices that invade every organization, sapping out their productivity.
So why do we make such a big deal about this issue, you ask? Won't the vendor simply return the duplicate payment? The harsh reality is, in most cases, like 99% of the cases, the answer is no. They are overworked. It'll go into a suspense account, and they'll investigate that duplicate payment when they have some spare time, which, as many of you know, in many instances is never. Okay, good intentions, but it doesn't get done. Some will give you a credit memo in an attempt to do the right thing. Okay, and they are doing the right thing. But these credit memos may or may not make it down to your accounts payable staff. And even if they do, the staff may or may not know what to do with them. But that's another issue for another video. So let's go over the 3 reasons real quickly. Number 1, your processes are not up to snuff. Number 2, you don't pay on time, and we'll talk a little bit about that. And then lastly, and we'll address this in a little bit more detail, your vendors may knowingly set out to deceive you. And even if they don't knowingly, or they're not intentionally trying to deceive you, some of the practices that they use to deceive you may be standard practices in their organization. So it doesn't matter what their intent is. If you pay them twice and you don't get the money back, the end result is still the same. So we want to stop that. Okay, so let's dive right in and start with number 1. Your processes aren't up to snuff. Okay, so what can you do about these? What am I talking about? Well, the number 1 thing that you can do, and this doesn't cost a red cent. In fact, none of the things that I'm going to talk about cost anything. And it will guard against a huge percentage of your duplicate payments, is to have a rigid coding standard. Not only do you want to set up this coding standard for your folks to use, you also want to periodically check and make sure that they are using it. Because if you set it up and they don't use it, you may as well not have wasted the time. Okay. Along the same lines, you want to have standard processes for processing invoices. So when that second invoice shows up and the person goes to process it, it's quickly identified or easily identified as a duplicate. Clearly, you want to have appropriate segregation of duties. We're not going to go into that in any great detail, but that will also help. And you should have, which I know many of you have, set up a separate account for emailed invoices so that doesn't become an issue. And of course, verify anytime somebody asks you anything out of the ordinary. There's a lot more that you can do, a lot more best practices, but really just focusing on that coding standard and standardized practices will get you a long way along the path. And of course, if you've automated, that possibly can help, assuming that you've done it in a meaningful manner and that you also check for duplicates. Okay, which I'm assuming you do. All right. That's number 1. Number 2, you don't pay on time. And when I say you don't pay on time, I'm not only talking about those who strategically drag out the payments. So maybe the payment terms are 60 days, but you don't pay in 60 days, you pay in 90 days. Or if you're an American company, more likely your terms are 30 days, but you stretch everybody out to 45 or 60 days. That's one instance of not paying on time. And in another instance of not paying on time, you just don't pay on time. You can't get the invoice processed. You can't get it out the door for whatever reason. So it doesn't get paid on time. Then the vendor sends the second invoice, a second copy of the invoice. They may use some of the practices we're going to discuss a little further on, but whatever, they send that second invoice. And when that second invoice shows up, your folks pay it for a variety of reasons. Okay, so the simple answer is pay on time, and the vendor then does not have a legitimate reason to send a second copy of the invoice, and you don't go down that path. All right. Before we get to the real kicking you in the you-know-what, I'd like to invite you to subscribe to this channel. It's free, completely private, and you can unsubscribe at any time. And on YouTube, if you ring the bell next to the subscribe button, which is down below, you'll be notified when we post new accounts payable content, which we do 2 or 3 times a week. And by the way, you don't need a YouTube account to subscribe. You can subscribe if you have a Gmail account. Okay, the last issue. The vendor knowingly deceives you. Now, even if they don't do it knowingly and they're not trying to deceive you, but they use some of the practices that we're going to talk about, you're in the same boat. You need to take the same steps because, the bottom line, money's gone out the door. Okay. Now, there is a practice among some organizations, it's being advocated by some consultants, to send a second invoice before the invoice due date, maybe on the due date or a few days before. I honestly don't know what legitimate purpose this has. The rationale is maybe it will remind the company that they need to pay the invoice, but you don't need that reminder, okay? And the belief is, and I could be wrong about this, but at least in certain cases, the companies are sending that second invoice before the due date with the hope of getting a second payment. Okay. They change the invoice number, and a whole bunch of vendors do it. Sometimes they do it just by adding like an A or a B to the invoice number, and sometimes they change it completely. This makes it increasingly difficult for you to identify that invoice as a duplicate, because let's face it, most of us rely on that invoice number. So that's the second thing that they do. And then the third thing, and there can be more, is they send a second invoice with a different total amount, and that different total is supposedly for legitimate reasons. So, for example, they may have included a late fee, which you may not pay, but anyway, by including that late fee, the dollar amount is different, or they may include some older unpaid invoices on it, or maybe a freight charge that you didn't agree to pay, whatever. The amount is different, so it makes it a little bit more difficult for you to identify this. If you have any tricks that you've encountered with some of your vendors playing games on you to try and get you to pay a duplicate, trying to pay twice, perhaps you could enter it in the comments below so we could all be aware of what's going on.
And now let's take a quick look at some tips to speed up your invoice processing.
What if I told you that there's a secret to revolutionizing your invoice processing and dramatically improving your efficiency? And no, this is not a pitch for invoice automation. What I'm about to share are simple strategies any organization can implement without spending a small fortune. In fact, most of the recommendations don't involve any expense at all. It doesn't take a rocket scientist to figure out that the more efficient an organization is in processing its invoices, the stronger its bottom line will be. Yes, there's a real connection. The process will cost less, and this is a biggie, there will be less of a chance of you making a duplicate payment, which we all know are rarely returned. So let's look at some of the simple tactics best practice organizations take to ensure they have the most effective and best practice invoice processing function possible. Tactic number 1. Pay attention to the invoice number when you're entering data. Now, I know if I was processing an invoice, the things that I would be most concerned about would be the dollar amount. I want to make sure I pay the right amount, not too much, not too little. The purchase order number, because I want to make sure our records are complete and updated and I close out that purchase order. And yeah, I'd put the invoice number in basically because I have to, but if I got it right or I got it wrong, it would not be a real concern, but it should be. And the reason is that many duplicate invoice processing techniques or techniques used to identify a duplicate invoice rely on the invoice number. And as you're probably painfully aware, duplicate invoices are now a huge problem, thanks to the fact that most people are emailing them, which is a recommended best practice, and it costs hardly anything or next to nothing. And so they email it to 2, 3, 4 people, whoever they can think of. Okay, so pay more attention to the invoice number when you're doing your data entry. Tactic number 2, encouraged email invoices, whether you're automated or not. This will get the invoices in your hand more quickly. You'll have a better shot of making your early payment discounts. You won't have to follow up. You won't aggravate your vendors, and it's just a smoother process generally, and it's the wave of the future. At this point, based on the statistics from AP Now, over 70% of all invoices are being emailed, whether the company is using manual processes or automated, email rules, so to speak. Okay. Now, because of this, we have tactic number 3, and that is to provide your processes with dual screens, okay? They should all have dual screens. This way, when those invoices are emailed in, they don't have to print them out to do the data entry, and it will just make your accounts payable process more efficient, more effective. And yes, a second screen costs money, but it's a one-shot expense, and screens are not that expensive, okay? So dual screens for your processes. And by the way, if you have hybrid work or you have folks who are working remotely, make sure they have 2 screens at their remote location also. Tactic number 4, and this is a simple one. Everybody can do it, no excuse for not, but standardize your processes, not only for how you process the invoice, but how the data entry is doing. You should have a coding standard so everybody enters the data exactly the same way, and that's when one of those dreaded duplicate invoices shows up, and they will, they have a better shot at identifying it and not processing it any further, so that they don't waste time processing that duplicate invoice. Even if they do eventually figure out it's a duplicate and don't pay it, they still wasted time processing it, and that does not make for an efficient operation. Okay, tactic number 5. When it comes to discrepant invoices, and we all have them, okay, and some of us have a lot of them, make sure that you log them, you keep track of them, and you follow up. Now, typically this might be done by the accounts payable manager. It might be part of your ERP system, or you might have to do it in a separate Excel spreadsheet, for example. But it doesn't really matter how you do it, but you want to make sure that you do it and that you keep on top of it. Because if you don't get those discrepancies resolved before the due date, and then you don't make the payment, your supplier is going to send a second copy of the invoice, and they're going to be well within their rights to do that because you haven't paid, and then you increase the chance of paying twice. Or even if it doesn't happen, still extra work to weed out that duplicate, wasted effort. So track discrepant invoices and follow up with them on a very, very regular basis. Tactic number 6. Consider using P cards, company credit cards, to reduce the number of small dollar invoices. Small dollar invoices take just as long to process as a large dollar invoice, but it doesn't give you the most value for your processing dollar when you have people spending time processing $100 or $200 invoices. So if you don't have a P card program, consider getting one. And if you already have one, consider raising the dollar limit if you don't have a good number of invoices going through the card program. Of course, when you set up a card program, you're going to do it with all the internal controls in place, and strong controls, and make sure there's checking and all of that, because you don't want to just get rid of a few invoices and then have money being spent inappropriately. But really, P cards, when a P card program is handled correctly, when it is set up correctly, it can do wonders for getting rid of all those small dollar invoices. And by the way, if you think you don't have many small dollar invoices, you might do a quick analysis of all the invoices that are paid to see how many are under $100, how many under $500, how many under $1,000, and you may be horrified when you see just how much time you are spending on those small dollar, those low value invoices. Now, tactic number 7. It wouldn't be accurate if I didn't include this, so I'm going to, but this is just one of many things that you can do, and that is, if it is appropriate for your organization, you might want to automate your invoice processing. If you haven't looked at invoice automation or accounts payable automation in the last few years, you might want to take another look. The price has come down tremendously. A lot of the systems are a lot more user-friendly. And even if you looked at it a few years ago and decided, hey, that's not for us, that may have changed. So you might want to take another look. Now, before we get to that game changer, and it is a game changer for many, I'd like to share that we have over 300 videos in our library on the AP Now channel. So please check out the rest of the channel after you finish watching this one. Okay, tactic number 8. Okay, and this can be a game changer because we waste a lot of time on that. And that is those invoices that come in, they don't have a purchase order number on them, they don't have the name of the requisitioner, you can't figure out, you don't know who to send it to for approval, and you or one of your staff wastes a lot of time taking it to various people around the company to see, hey, did you order this? Can you approve it? Just a real time waster. So just return them to the vendor. Now,
once you understand processing as well as you do, you don't want to get tripped up when the accounting isn't done perfectly. That's where trial balance comes into play. Click on the link that has appeared on your YouTube screen and is in the description to make sure you fully understand what trial balance is and how it can save the day if, despite all your best efforts, an invoice accounting error still slips through. Good luck.